The official Trump meme coin got a lot of hype and a lot of price appreciation with the announcement of the Trump dinner. Now, a lot of that excitement has waned down. Trump is crashing. The question is, does it make sense to buy this dip now? Let's have a look at some metrics most people are not considering. Let's try to figure out what's actually driving the price. Now, unfortunately, the entire Politify crypto category was the worst performer in the last week. It lost 28%, which is way more than any other category in crypto. We saw a massive dump of official Trump in the last 24 hours, a sell-off within 1 hour that brought the price down by more than 10%. And the news is full of hit pieces, full of articles criticizing the Trump dinner, how this is potentially a conflict of interest. But within the crypto space, the Trump token still garners a lot of interest. Here's my last video on the Trump token published 1 week ago. It performed pretty much like the average video and still gets quite some search volume. The very first video on Trump was published 108 days ago, so on the day of launch. At the time, the price was $13. But I was actually somewhat late to the party already. We got our first trading signal of the Trump token here in the premium influencer alerts channel, where Across the Rubicon bought Trump for only $3. So here's Across the Rubicon, shout out to them. They are also tracking various influencer wallets and they get into tokens very early. And so still up to this day, official Trump is by far the largest asset on the Solana chain if you just look at the liquidity pool size. So there's 371 million worth of liquidity in official Trump. The largest Pump.fun ecosystem token, Fartcoin, has only 21 million of liquidity. Here's, by the way, when Across the Rubicon bought. So that was within the first 4 hours after launch of the token. And this is what crypto is all about. It's about being early. It's about buying when most other people are still unaware of what's going on. After Across the Rubicon bought, after we got our signal, the Trump token went up by 2000% and subsequently tended to go down. Now, when we buy an altcoin, when we buy a risky meme coin even, we take on that additional risk in order to get more performance. So if we just buy Bitcoin or we just buy Solana, we've got something that's comparatively less risky. Thus, we should also get less performance, right? It's always about risk versus reward. More risk should be compensated with more return. And because of that, I always like to look at relative valuation charts. So I don't look at Trump in US dollars. I prefer looking at Trump relative to Solana. In other words, does it make sense to buy Trump over just plain SOL? And the answer is, historically, if you hadn't been a purchaser of Trump within the first 24 hours, you likely underperformed. Now, here was the announcement of the Trump dinner. It turned around the trajectory quite a bit. We then got our secondary rally. Very often those rallies are caused by short squeezes. And then when enough people bet on falling prices, the market makers and the big whales tend to rather push up the price. But more on this in a second. The reason why so many people bet on falling prices of the Trump token is the tokenomics, or the potentially increasing circulating supply of the token. Now, no tokens officially have unlocked, but we all know there are over-the-counter deals, there are OTC deals, where some people might be buying the token and then get the vesting later on. They might be buying it at a discount. And so we don't really know how many Trump tokens are already unlocked and are already circulating. Here's an announcement of the Trump dinner. So the top 220 Trump meme coin holders, they get invited into the White House to then get a presentation by Trump, potentially even talk with Trump. Now, there isn't just a market for spot. There isn't just a market to buy and sell the asset. There are also bets on the price where the asset itself isn't moved. And that's the derivatives market, that's the perpetual futures market. So there is a financing cost behind that perp market. If you want to bet on falling prices of Trump, and enough people want to do this as well, then financing that position becomes very expensive. You might have to pay, say, 70% per annum to just bet on falling prices because everybody believes in falling prices. And so it's expensive to do so. Now, if enough people bet on falling prices, it can be beneficial for the centralized exchanges to squeeze the shorts, to buy up a lot of the supply on the spot market, to then force the shorts into liquidations. I believe this is partially what happened with the dinner announcement. Yes, some people bought the token because of the additional utility, but to be fair, many people also just bet on long-term falling prices because the trend was very clear. The reason for that trend was also clear. And when there are enough people betting on falling prices, buying up the token at the right opportunity for the market makers is very attractive. And that's why the price also appreciates that quickly. That's also why we saw our secondary squeeze. Because some people see then how the rally finishes, they then might enter the short over here, and then the market makers just buy up the token one more time until the last short is liquidated. Now there's a limit to this game because it's all about how much the price can be manipulated. If the market cap is large enough, you can't just 10 or 20x the price. And the Trump token is quite large. It's the fourth largest meme coin across all blockchains. It's got 2.2 billion of market cap, and as already said, there is a ton of liquidity on chain as well. So if the price gets liquidated to the upside, there's all of those arbitrage bots that trade between on and off chain as well that make money in the process. And so the people that make money with liquidations, they have to give up some of the profit to those arbitrageurs. Really, in the current state, most of the Trump tokens are now held not by the small retail guys, but by the large whales and by the market makers. Thus, the price development is very much dependent on the perpetual futures market on leverage. We can see that when open interest on the Trump token is going up, when more people bet on the Trump price, on the perps, that then also the price of spot is going up. So it's pretty much the tail of the dog that's determining where the dog is running. Or in other words, you're a sports betting house and you offer bets on, say, the outcome of the football match, but at the same time you also bought the referee. You've got impact on where the price is going or what the game will do. And here's the proof of that theory. So we've got in yellow the Trump price, and we've got the open interest on the perpetual futures market in green. And there's a very strong correlation between those two numbers. And when the open interest is going up, the price tends to follow. And here is why it makes sense right now to rather be careful with shorting Trump. The long-term trend is clear and there is potential downside, and this would invite to short Trump. However, the financing costs on shorting Trump are extremely low right now. The shorts have to pay the longs 0.07% every 8 hours. That's roughly 70% annualized. Betting on falling prices of Trump became very, very popular, and we have seen what happened in the past. Right? The short squeeze was somewhat delayed, but it did happen a few days afterwards. And so here's my strategy in all of this. I'm waiting for the next short squeeze. I'm waiting for potential good news. I'm waiting for some reason to enter a short again. I do believe that long-term Trump is likely going to continue to underperform Solana. And we can also hedge ourselves against the general macro. So let's say Bitcoin is going up, Solana is going up. We can, at the same time as we short Trump, also go long Solana. So in the end, we make money when Trump underperforms Solana. But right now, I think it's a bit too dangerous to enter a Trump short at this moment. Again, because it's the popular trade. We want to short something when nobody else is shorting. And we want to short when we are at elevated price levels, when there's some reason that the price is heated again and is likely going to deflate. Yes, we might just continue trickling down, but there is a risk for a squeeze. And if there's some kind of positive news around Trump again, we're probably going to see a very sharp, very significant move to the upside again. And we don't want to be betting on falling prices at that time. Now, crypto cannot make money out of thin air, right? For one person to make a 10x return, 9 other people on average have to lose everything. And so it is a winner takes most market. This is not just true on a trader basis, it's also true on an asset basis. As in, most assets tend to go down and a few assets outperform. What I found interesting is the different returns based on the centralized exchanges. So different centralized exchanges list different tokens, and the performance of the tokens that are listed on Binance, they tend to do worse than the rest. So here's the performance in the last week. Let's check the 1 month performance. Again, Binance performed the worst. Let's go to 1 year. And one more time, the Binance tokens tend to do not that well. And so my impression is that a lot of the returns that those centralized exchanges are making is not just from trading fees, it's not just from financing fees of perpetual futures, etc. It is also from getting allocation for various altcoin projects. So Binance might take a cut of the overall supply and then sell it off silently in the background, depressing the prices. And other centralized exchanges might do this less. So that's something to potentially consider if an asset is mainly traded on Binance and not on other exchanges. It's reasonable to be somewhat careful. Now, when the chances are so high that we pick a loser in this market, when most returns are just in a few assets, then does it make sense to simply just follow Bitcoin? In the end, Bitcoin's dominance continues to increase. So that's a measure of how much of cryptocurrency's market cap is currently in Bitcoin versus all the rest. And we tended to see this going down very quickly, very sharply when we were at around 70% Bitcoin dominance. So those crashes in Bitcoin dominance, this is altcoin season. But it looks like we are on our merry way up, and it looks like this could continue until the next year. Now it's fascinating to see this chart, because while the Bitcoin dominance went up, we saw how Memecoin speculation, especially the Pump.fun ecosystem, grew a lot. Now, why did Memecoin speculation become that popular? The reason is in this chart. This is DeFi Llama. So how much capital is in decentralized finance across all blockchains? And we had our DeFi summer in 2021 and then the collapse in 2022 where Terra Luna went bust. But it wasn't just Terra Luna, it was also Olympus DAO, which went from $1,000 to $20. It was Time Wonderland that went from $10,000 to 3 cents. There was Tomb Finance, which went from $3.50 to less than half a cent. Or how about this? Elephant Money, also just a straight destruction of capital. It became more and more clear that a lot of those decentralized finance protocols did not actually make 20-30% per annum. Instead, they were just Ponzi schemes in disguise. And so we had the DeFi Ponzi schemes, we had the vesting schedules and the insider selling of all kinds of altcoin projects. And so then Memecoin speculation seemed to be the fair player versus player game. At least over there were no insiders that were selling additional supply. At least over there, we didn't have a clear Ponzi scheme. It was just tokens that were traded against one another. That's why meme coins took off that much. We can see that the market now has less risk than it used to have. So what we see here is again, the decentralized finance total value locked. That's the blue line. But what we see in turquoise in the background, that's the stablecoin market cap. So now there's way more stablecoins compared to DeFi capital. In other words, the market is less levered, it is less risky, and is likely not going to crash as a whole that soon. Still, trading meme coins is 100% player versus player. And since it's not just a game of luck, but also a game of skill, a game of on-chain analytics, or a game of figuring out who buys the right tokens early enough, who might have a following to attract attention, since it's still player versus player, some few players make all of the gains, they make the 10x gains, and 9 other players, they lose everything. Now there are actually some concrete numbers to this. Only 0.002% made more than $1 million with Pump.fun, only 0.05% made 100k, and only a bit under 0.5% made 10k with Pump.fun tokens. Now the average wallet size is of course much smaller than that, so there is a bit of dilution in those numbers, but it's clear that most people can't win in this game, right? This is a capital concentration process. And so naturally, after a while, when capital is in the hands of a few winners, the market tends to slow down. And that is what we have seen, right? The peak in Pump.fun activity happened in January of this year. And so again, does this mean we should just stick with Bitcoin since Bitcoin's dominance is going up? Or does it make sense to potentially try to beat that market? Let's have a look at the largest Pump.fun ecosystem token, which is Fartcoin. It's got a size of more than 1 billion. With our wallet tracking, we got a signal that Kyle Chessy was buying Fartcoin at around 4 to 5 cents. Here is Kyle Chessy. He tends to make some very interesting trades. Not all of them, of course, work out. Not all of them become a fart coin, but he's definitely closer to this than closer to this bracket. And so this is what I believe is the secret in this market. It's trying to find out who are the winners and then also what kind of wallets do they hold. So here are the wallets that we have found using on-chain analytics just by Kyle Chessy. In total, we track more than 400 wallets, and it's all in this influencer trade channel. And here's the proof. I made a video on Fartcoin when it was still at 5 cents. So I tried to publish videos still early on this channel. Of course, I don't talk about every single influencer trade here because the influencer trades are part of the premium community, which by the way is down below. It's thebitcoinstrader.com. So since that alert, Fartcoin went up by more than 4,000%. Then it came back down. Now it's recovering again, still since the alert, an increase of more than 2,000%. And so this is how the game works. I'm not even certain that Kyle Chessy is the one that found the token first. He might also follow other wallets. He might also be part of other communities that find those things early. And that's the reason why he might have bought. And so there are different strategies to outperform this market. Of course, we can try to find this 10-20x returns, but more often than not, those investments go to zero, right? We can have 3, 4, 5 failures. If one of them goes to 10x or 20x, that's fine. But it's pretty hard on risk management. A strategy that also works, especially when prices tend to go sideways, when money isn't flowing in as quickly, that's shorting altcoins that have just recently seen a rally. So I've made several videos on this as well. Check out the older videos on Dogecoin on this channel. So between November of last year and January of this year, I showed the exact same chart. This is not Dogecoin in US dollars, it's Dogecoin's dominance. How much of all of crypto is currently in Dogecoin? And it tends to be trading in somewhat of a range again. And the price goes up very quickly, maybe when Elon Musk talks about Doge, or maybe when there's another significant news event. But after that rally, the price tends to underperform. And we can make money from that underperformance. We're not even betting on the price itself going down. We can bet simply on Dogecoin underperforming the rest of the market. So we can bet, for example, long Bitcoin, short Doge. So in the end, we are not delta exposed. That means we are independent of where the general market is going because we have one asset that's long, one asset that's short. The overall macro doesn't matter too much. But then we are betting on the relative performance of Doge to Bitcoin. And when that goes down, we can make money as well. And I have made money with that short. There are plenty of very nice trades that our community has done. So over here are just a few of them. This has been shared by community members. And yes, not every trade works out like this. But if we have risk management in place, if we look at the overall trading ranges, because Dogecoin can't go above certain relative valuations to other cryptocurrencies, then we have positive expected value. So instead of trying to pick the few winners, an easier strategy is just to bet on most altcoins doing worse. And so that's then where a lot of those trades are coming from. I'm of course sharing my own trades as well. So this was the last trade that I've closed. This was a short on Trump. Trump relative to Solana was at a high, and then subsequently it deflated, and then with the right leverage we can make some quite nice gains relatively quickly. And so this is all part of the premium membership. It's not just the Telegram chat, it's not just the trade signals of the influencers that we are following with those 400 wallets, it's also a whole platform with tutorial videos. So in case you've got some time, let's say during your lunch break, feel free to, instead of just scrolling Instagram, to go through the tutorial. So here are those tutorials. There are more than 100 in total. Feel free to just binge watch them. So it's currently $125 per month. There's also a 1-week money back guarantee, and you should see somewhere on the screen now a link to premium. Just click on that and feel free to check it out. So see you next time on YouTube, or see you in premium. Cheers.